Good morning, traders. Here's your market update for today. So, starting with the US dollar index, the US dollar index traded near 100 on Tuesday, close to its highest level since May, as traders reassess the odds of a December Fed rate cut following the mixed signals from policymakers. Last week, Chair Powell said a December move was not a done deal. Also, Chicago Fed's Gooseby warned inflation remains the biggest concern, while Cook flagged risk to a weakening labor market. So the markets now price about a 70% of chance of a 25 basis point cut next month, down from 90% after the last FOMC decision, but still higher than the 60% earlier this week. With the government shutdown limiting data releases, investors are watching this week's ADP employment report for clues on the labor conditions. And risk currencies failed to rally after the 1 year US China trade truce, leaving the dollar dominant. And technically, the DXY has broken out of a bullish rising wedge with measured upside near 100.5. MACD and KDJ remain constructive, and the 14-day RSI at 68 shows steady but not overheated momentum. The resistance sits at 100 and 100.26, a break above targets 100.42. Support lies at 99.35 and the 99 psychological level. Next, WTI crude oil. The oil prices fell below $60 a barrel on Tuesday after 4 days of gains, as traders wait OPEC Plus plan to pause production hikes early next year against lingering oversupply concerns. The producers agree on a modest December increase, but will pause further hikes from January to March due to the weaker seasonal demand. This pause follows expectations of an oversupplied market in 2026. Supply risks remain, however, amid tougher US sanctions on Russian oil, which recently ignited a tanker fire in the Black Sea. Forecasts for 2026 WTI price have been revised higher from 57.5 to $60 per barrel. And technically, US crude continues to trade range bound after rebounding from 55.97 to 62.38. The prices are consolidating near $61. Repeated failures at this level indicate strong resistance and near-term bearish sentiment. Support is clustered between 60 and 59.58. A break lower could target 58.75. If 60.91 holds, a rebound towards 61.64 remains possible. Moving to spot gold, gold traded around 39.30 an ounce on Tuesday after touching 39.29 earlier. The metal remains in consolidation following a strong 53% year-to-date rise. Investors are awaiting this week's ADP employment and ISM PMI figures for direction. Although the Fed delivered its second rate cut last week, Chair Powell's comments reduced expectations of another in December. That uncertainty has kept gold range bound near $4,000. While a firmer US dollar and seasonal weakness pressure the prices, the longer term outlook stays positive given geopolitical risk and easing policy. The CME December futures contract remains the most active amid year end position adjustments. Bulls aim to reclaim 40.95 and 4100, and the bears look to push the prices below 3708 and 3700. Immediate resistance stands at 40.50, followed by 40.95 and 4100, and support lies at 39.16 and 38.86. And last but not least, the Australian dollar. The Aussie dollar recovered from intraday losses on Tuesday after the RBA kept the cash rate unchanged at 3.6% and Governor Bullock signaled no immediate easing. She said keeping inflation above 3% was not ideal and stressed caution. The Australian dollar traded near 65 cents and remained in consolidation just below this level. A break under 65 cents would expose the 200-day SMA as 64.45 and October lows around 64.40. And upside resistance stands at 65.45 and 66 cents. A move above those levels could lift the pairs towards 66.30. So that concludes today's morning review. Keep an eye on the ADP report, ISM data, and ongoing Fed commentary because these are all likely to guide the market volatility this week. And trade safe. I will see you in the next update.